All right, what's going on, everyone? Jamie Saettele here, Midweek Strategy Webinar with SB Trade Desk. It is April 25th, 2018. And a couple points that I want before we get started today, before we dive into the charts. First of all, we've talked about this a lot, but I think the price action, especially over the last, I'd say that really over the last couple weeks, I think really drives home the point that we can't try to make assumptions, say based on one market, and then apply that to another. What I'm talking about specifically is the Japanese yen and equity markets, right? So, if we were looking for resistance, say on something like the S&P, right? Remember when we came in and we filled that gap over here? Although I thought we were going to try to make it up to 2740. Hey, Pooja, what's going on? You're saying breaks in the audio. Can everyone hear me okay? Can you guys hear me all right? Okay, seems steady now, says Mark and Pete and Mahai. All right. So, yeah, getting back to what I was saying here, we're talking about looking at, say, the S&P 500, just your general, risk gauge, probably the most widely followed market out there, right? And then maybe trying to apply that to Japanese yen or, your prototypical risk on, risk off currency. And really, dollar yen probably is the most carry sensitive vehicle among majors because rates here in the U.S. are high now, right? They're higher than they are in Australia and Canada. Notwithstanding like Mexican peso or Brazilian real or something like that. But when we're talking about that, we can't make assumptions, right? Because since the S&P started to take a dive, dollar yen's gone straight up, right? So I know it's hard sometimes because I make the same mistakes. It's just human nature, especially being around for a while and seeing relationships, and kind of thinking that, well, if I'm expecting a sharp sell-off, even though the dollar yen chart looks great or whatever, maybe that's not the right thing to do. So I just want to drive home that point of looking at each market based on its own technical merit, its own chart, right? Rather than trying to, make assumptions based on another market or maybe seeing what we want to see. And look, we're all human, so that's going to be always part of the fight. But let's dive into it. I've got equity markets up here now, but might as well just start with dollar. So we're going to look at actually US dollar, the FXCM dollar index here. Now we're heading into May is historically the second best month of the year for the dollar, right? That's just something to keep in mind as we head into that month. Now December is historically the best, so that obviously was not the case last year. So I don't want to again make too many assumptions based on that. But what we are looking at here with the dollar is we've been, since the breakdown in January, in the January low, we've consolidated and it's resolved to the upside. All right, it's kind of that simple here. So where might we find levels that we would wish to trade? So first of all, here's the daily. All right. I want to point out two levels to pay attention to probably this week. But one is the 200-day average and the trend line from March of 2017. And that's going to be pretty close to the low from August of 2016. That same level was actually support in August 2017, and you had some consolidation around that level actually as we opened up the year. So if we scroll in or zoom in, that area, so I'll call it 11,840s, is going to be, what I would consider a contentious area to pay attention to, followed by support, which I would just look to the trend line that goes years, way back, right? And that's the 2011, 2014 trend line. You can see that even that trend line, it's years old, 7 years old. Even that trend line was, active, if you will, over the last month and a half as resistance. So you can see here that if you look at the price action from, say, April 17 low here, right, just last week, you do have what appears to be a 5-wave move to the upside. And coming into Draghi tomorrow, if we do get something of a blowout, quick move higher in the dollar, obviously that'd be mostly euro, but I'd be looking at this area as resistance. But if we pulled back first, I'd be looking at this level as support. So that's going to be essentially 11, at this point 11,730 or so, which is pretty much in line with the former highs, right? So pretty clean levels as far as the US dollar index is concerned. Again, this is the FXCM index, and that's what I will be focusing on heading into tomorrow and then Friday, okay? So mark those levels down. You're going to want to know that. Now, what about upside slope structure from, I don't want to get, there's nothing I, obviously before, been looking for before the webinar and everything, and I'm doing my work. I'm always looking for, what could make sense here. The one that's going to make the most sense is probably this one. That would be pretty darn bullish if that were the case. And you could say that's getting confirmed right now, but at this point, there's just not enough evidence to suggest that we really pay close attention to this. All right. Now, if we zoom back, or zoom out, I should say, to the weekly chart, what we're looking at here is the larger fork goes back to the January 2016 high. And the median line itself, again, has not been all that important, but you have had some pretty good touches around, say, the 75 and 25 lines. So draw that in. Right, this whole zone here, you can kind of see where I'm moving my mouse. That whole zone is one to pay attention to for some sort of bigger resistance, right? So getting past this week and maybe some point in May as we continue higher. We've been talking for a long time here about the one-sided positioning in dollar related assets and the dollar itself, right? Huge short position. Euro, huge long position. British pound, huge long position. Just recently, if you saw the COT that I sent out or published on, I guess, Monday, then you'll see the huge Kiwi long position as well, right? Aussie's not really there. Either is CAD, but Kiwi, pound, and euro all extremely long from a speculative standpoint, so there's a lot of room for washout. But if we look at this weekly chart, you can see, just draw your channel all the way back to August 2011 low, and then off the 2014 low, and you can see that the channels within there, this is your 25 line from that, and that was precise as support back in September, and we kind of hit it early in the year, then tanked. So that would be the level that I'd be looking at, actually, going into May, and that's going to be all the way up at 12,000. Again, that is looking out a little further though, right? This week, we're just talking about these levels down here, 11,730 and 11,840, all right? So do pay attention and be aware of those levels. Okay, let's get to Euro, which is going to be obviously huge in play tomorrow. So I'm going to keep it real simple here. I want to be a seller. I still think that the right move is to be selling this line, right? That was the line that was support back on 4-6. It's also the line that was support on Friday. That quick washout low we had that we were short into. So we might actually end up getting short again up near 2270, which is actually going to be your weekly opening price. And you can see that if we draw in just a simple channel line here, you've got a parallel that was pretty well defined and price touches it. So my plan is really the same as it's been all week, and that is to be selling up on this line. And that, lo and behold, that intersection occurs right at ECB tomorrow. All right. So again, that's going to do 70. Now, just like US dollar itself, I'm not sure. We might end up, excuse me, we might end up getting a bit of a washout before then. And if we do, then pay attention to the center line. Hasn't been all that precise, right? But you did get good support close to it after dipping below it a couple times back in December before you had your last big run on the upside. Okay, and that's going to be about 2110 or so, which is also a square root level, I might add. All right. So the euro levels to pay attention to tomorrow on ECB, 2270, 2210. Okay. Now I don't want to be, say, placing too much of a target, so to speak, on, say, on euro here, because again, we've seen it. I mean, we just saw it with Kiwi, but we're getting a big, if we're going into a bigger setting a target, you're kind of selling yourself short a little bit, right? And I don't really want to do that. So at this point, just pay attention to these levels and understand that bigger picture, we could have a much bigger move on our hands. And I really wouldn't want to change that opinion probably until we saw evidence of a real washout in spec positioning. So this is euro arithmetic scale. This is euro log scale. Get a little creative with it. You can kind of imagine getting down to the 52-week average at some point, or even lower on arithmetic scale. Right, log scale, you'd put a little closer to the 52-week. That spike low there from January, the January low is 1916, and that actually might be an area to think about. But again, going into tomorrow, I just want to be paying attention to 2270 and 2110. Right, if we have our levels marked out ahead of time, that really helps with the execution going into the event, because you're at that point, you're not doing your analysis during the event or during market, market trading hours. You're all set and ready to go. You have your plan. Okay, British pound. So first, let's take a step back and look at the British pound on the long-term chart. 200-week average, massive weekly reversal. Okay, J spike, weekly J spike, right? Some of these have turned out to be huge. You can see here, some on the lows, some on the lows, some on the highs. And just like I wrote in last night's chart, looks like we're getting that final push to the downside here. So it's going to be 1, 2, 3, 4, little washout 5. This low right here, that's the 316 low, that's 38.87. Look for that to get tagged, and then maybe get yourself a bounce or a counter trend move. And that would also confirm the larger fork here. Okay, and you can see that fork has been a level that that angle has been one that the market's responded to. Okay. My belief is that you'll probably see 140.80 as the resistance level that you'll want to be shorting for a bigger drop in cable. You can see 140.80 square root level. It's been good all year. You also have the 200 period average there on the 4-hour chart, which was recently support back early in the month. You've also got, if we just look at a daily chart, that's about where the 20-day average is now as well. You can see the 20-day average right here was 141. It's one of my favorite setups. It's just, you come back after you make a big reversal like this, you come back and your entry or your first real attempt on the short side or to get in line with what you think is a new trend is going to be the first tag of the 20-day average. It's just a very simple setup, okay? All right, let's look at dollar yen some here. So dollar yen, near term, I kind of have us at right now. So had that short triggered last night and was out within a couple hours, I guess, overnight. But I did it because on the really short-term chart, and this is where you can get yourself in trouble, as I did, but looked like we had an impulse down. I was looking for A, B, and then a C wave down into 108, 20, 30 support before we would actually want to be buyers for this run here. Unfortunately, it just kind of happened right away. So as it's happened, we are coming into resistance now. Have us at resistance now. Essentially 109.40 is the square root level, but we've already hit the median line in the slope confluence. And you can see that is right here. So again, broader dollar upside, but at resistance now in dollar yen. So I'd be looking for us to pull back some here. Again, want to see a reaction, want to see a pause, but we are at resistance, okay? Now, bigger picture on dollar yen. Bigger picture on dollar yen to me might be kind of a mess for a while. All right, so the wave count that I've got, on a big picture scale, right? You got 5 up from 2011, get the sharp move down, 3 up, 3 down. The risk of all of this, in my opinion, is that all this is a B wave, and that a B wave can end up as a triangle. In other words, we could be going higher here and then lower and then higher, and that could take, a year plus. So from here, right, resistance, but would also be looking probably starting at the 108.20 level. Okay, just if we kind of extrapolate our triangle idea, understanding that you go, alternating legs 618, a move all the way up to 116.70 in the triangle is a possibility here. Okay, at some point. right? I don't know exactly when that would happen, right? But at some point, that is certainly a possibility. So, especially with us and the way that we've come out of this head and shoulders pattern here that started developing in mid-February. Okay, so that's the deal with dollar yen. See, getting a little bit of a reaction. Also, what I would pay attention to with dollar yen, and if we start to here over the next couple of days, you've got this line here, the obvious, the blue line or whatever. But I would also pay attention to this magenta line here. Okay, you can see that's been support and resistance so far this year. So if we pull back from here, that gives you kind of a range for support. Call it 108, 108-ish to 108, 20, 30 support, and then resistance now. All right, let's look at commodity currencies, which are just getting shellacked and hammered. So Kiwi dollar, I guess getting out of the short over here doesn't seem like a very good idea at this point, does it? So the idea was I was wanting to short another bounce, and I mean there just hasn't been a bounce. I think this has gone down every hour over the last 1, 2, 3, 4, 5, 6, 7 days or so. So it's getting awfully extended on the near term, and at this point, look, I look at 70.17 to 70.31. That is going to be a square root level 618 of the run up, as well as highs from here in mid-December of last year, and that's an area where I think you have to try to look for some upside, right? I still think that this median line could come into play. Look, we've seen the way Kiwi trades. It trades like this. It kind of like it drips, 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 and then it'll kind of do a washout, and then you'll get a sharp spike in as a counter trend move. The way we're trading now reminds me a lot like back when we were breaking. So say even breaking down from the highs in 2014 or even the 2015 breakdown, right? And you'll see that you do get a couple days, so you do get some pullbacks, okay? So all we can really do is try to define the levels. But at this point, I'm not, keen on necessarily putting an order into buy here because you're obviously trying to fade an extremely strong move. But 70.17 to 70.31 at this point is where I would expect to see something, right? Something happen besides just the straight down move, okay? I don't know if we're going to get all the way back to 71.80s at this point. That is the 200-day average, and where I've wanted to sell it this week, and obviously it's kind of gotten away from us, but I would still pay attention to this median line over the next week plus. You can get back into there and develop maybe 100 pip or so rally from down here, then you would be up into the median line, which is a well-defined level. Okay, I would say that this median line is very well defined and confirmed as a point of interest. You can see that late last week we sold into it, we bounced around it, and then once you broke it early this week, that would have been, I guess, Sunday. Yeah, no, that would have been Friday. Right here, that was the week open, so that's Sunday. Sorry. So then you broke it on Monday morning, continued lower. A move back to the breakout point just gets you back to the median line, but again, it might not be until over here somewhere. and closer to this low of 71.50. But bottom line, folks, we've got good levels to pay attention to, and they are 70.17 and 70.30. Get ourselves a little here to 71.40, 71.50, and then see if we can get short for a bigger move on the downside. And if we look at that, bigger picture possibility on the downside, this is an old fork that really haven't paid a lot of attention to for a while. But hey, if you know, it's back in play. So where could we go from here? Well, this parallel, which was resistance back in 2016 and 17, and even support back in 2017, to me, that's certainly a possibility at this point. That's essentially taking you back towards the range lows of the last couple of years, right? So just a big box. Which way does it resolve from here? That I don't know. This looks like an awfully ominous head and shoulders type, and with the way we've kicked the downside, I'm not going to dismiss that potential for something drastic on the downside, especially as we head into, again, what I mentioned before, the seasonally bullish period for the dollar, bearish for Kiwi, Aussie, CAD, etc., etc. So pay attention to those levels that we've mentioned on the last chart as it pertains to the New Zealand dollar. Okay, Aussie dollar. So you really got to ask ourselves a question. I've been talking about this resolving to the upside for a long time. It just hasn't happened, right? Like, don't you think the Australian dollar kind of had its chance at this point with the moves higher in copper, the dollar tanking? Really, it couldn't do much except from early 2016, except what could be just a giant wedge in a larger downtrend. Okay. From here, the levels to pay attention to. The long-term lower parallel, which was support back in 13 and 14. Okay, that is going to be about 74.70 at this point. Okay, 74.70. You can see that I've got this drawn, and that is based on this trend line. So if you were to go parallel a little bit, you could get down closer to 74.30 or so. I'd rather be a seller of the New Zealand dollar. Oh, Mahai, don't worry, man. We're going to look at equities. Absolutely, we're going to look at equities. Don't you worry about that. But I would rather be a seller of the of Kiwi than Aussie, just because, again, I do think that the Aussie Kiwi chart is pretty damn looking bullish. Like, this is the, I mean, doesn't really get much better than that, right? So would rather be selling the New Zealand dollar than the Australian dollar at this point, but it doesn't mean that I'd like to buy the Australian dollar against the US dollar, at least not get married to it, right? Maybe down here, 74.30, 74.70, you're going to get something of a bounce, but not trying to play hero here and buy it here. I mean, right here is no man's land, really. Okay. I mean, you got to take out this low, you'd think, before people cry uncle and you get any sort of relief. And with that, why don't we take a look at copper too? So as you mentioned, we had, Aussie had its shot, right? Like copper and Aussie. While copper based and ended up ripping, the Australian dollar ripped at times, but its setbacks were much larger. In other words, it was relatively weak. It was, the underperformer, if you will, against against copper, relative to copper. So when I look at it from this angle, just look at the horizontal level that we came into in copper, and this is all the way back in late December, early January. Right, this is not a new thing. And then you can kind of see, I mean, this is like the potential for a massive rounding top. Right, underside of the trend line brushing against that. This does not look all that bullish to me right here. So I'd be worried about kind of a dump from here in copper. And if we look at the weekly chart, this is a monthly chart. Let's look at a weekly chart. This is log scale, and we are continuing to press pretty major resistance. I mean, this is your trend line all the way back to the 2011 high. All right. So even a drop, say, back towards this level, right, which was the old parallel that was resistance for years in 2012 and 2013, and then support back in December, even a move down to there, you can imagine that's a pretty big move, 290 from 313. That would probably send, or I should say coincide, because copper does not move the Australian dollar. The Australian dollar moves on its own accord, but that would probably coincide with the Aussie, which has been the weakling, acting like crap. So doesn't look so great here for copper. Potential for something nasty, in my opinion. On the downside is you have this rounding top type of pattern going on since August 2017. All right, how about crude oil and dollar CAD? Well, you know where I'm going with this. This is that really long-term chart of crude oil. And we've been trading on that level for 2 weeks now. And this is weekly. So let's just zoom it down. Go to 240 minute. Yesterday's piece on crude, my argument is that if we kind of break 66.50, which is or 66.60, excuse me, which is the old high from January, that to me kind of ushers in the flushing out in crude oil. Okay, at that point I would start to get pretty concerned, and I would think that coming from this major resistance, it would start to really take effect. So without trying to forecast where we're going, we are going into the weaker part of the year, and you could get all the way down towards the 56, 57 area, which, if you think about it, is not all that drastic in the context of just this chart, right? It would just be the channel actually support. There's going to be supports along the way, obviously. This parallel here, 63. But yeah, pay attention to below 66.60. I think it starts to get ugly for crude. And if we do start to break down, you're probably going to want to watch this for resistance as well. Okay, just like it was back here. So that is my idea on crude. I'm pretty damn bearish crude. Did you see the chart last night? The positioning, I came across this. There's a thing called the daily shot. It's sent out. It's actually, I think, part of the Wall Street Journal, but I came across it there. They had reproduced it, so I reproduced it, but you can see you take Brent plus WTI, so this is COT data, but the positioning is actually almost twice as bullish as it was back in May of 2014. That's pretty crazy. All right, May of 2014 is right here. Okay, we ended up topping in the second week of June, and then it was, kind of never looking back. Now, I'm not expecting crude to do that, obviously, because, well, one, we're not at $110 a barrel. And two, I do think that we've seen a massive bottoming out in crude. But, you know, drop from here down to 56, 57 bucks over the next couple of months, I don't think is that crazy of a thought given the positioning and given the levels. All right, what about dollar CAD now? Okay, dollar CAD. Near term, I'm wondering if this comes into play at some point again, near 27. It does look like you are completing or, you know, subdividing into an impulse higher here, 5-wave rally, right? Let's just count the waves on an hourly chart. Iman, what's going on? Yeah, I did look at Euro, but I will give you just the quick levels real quick here in a sec. But if we count these waves, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. You might have one more dip and another rally. So far, we're actually failing at the month open, which is 28.94. But if we can take out 29.40s, which again was this resistance up here, and then get a bigger pullback, you know, that kind of would make sense to me. It just looks like a magnet. You know, big get up there, pull back, 5 waves up, and then, you know, look for a corrective decline. So trading wise, you know, maybe pay attention to the 29.40s for a pause and a pullback. But the idea here is probably going to be buying some sort of a corrective decline in dollar CAD. Be my best guess. Right here, kind of the middle of nowhere again, a lot like Australian dollar actually. But let's look at the big picture on dollar CAD though. So if we look at this, 3 waves down, I was looking for bigger resumption lower. It just hasn't happened. So I'm not going to sit here and fight it. But, you know, we're going into, again, I've said it ad nauseum, but we're going into the seasonally dollar part and notably weaker for commodities. You know, so this could just be a giant consolidation all the way from 2016. Is it completely crazy to call this maybe 1, 2? This is big 3, 4, and you actually have another 5th wave? I don't know. That'd be awfully drastic. I'm not too worried about, you know, getting this right at this moment. I'm just worried about trading the levels, and I think that the levels are pretty clean as far as where you'd probably want to be a buyer or not, and that's going to be down in the 27.20s, right? 200-day average, excuse me, back above it, and price is also, or the average is trying to turn up. So, you know, larger bullish things starting to happen with dollar CAD, but that near-term picture again, look for us to take out the 29.40s and then get a pullback. Couple trades there, of course, depending on your style, but I'd be looking to fade anything above 29.40. There you go. All right. Could be a 1-2, 1-2. Either way, don't worry about trying to count the pattern. I don't like to label patterns or count them, right, unless it's so obvious that even my 3-year-old son can do it, right? And sometimes it's better to think like that, actually. It's better to be, you know, it helps you think simply rather than try to make up something that's not there. All right, I got a question on dollar Swiss, so we'll look there. Dollar Swiss has been tricky as hell for me for years. Just, you know, when you get any sort of a break, it's a false move. I'm not sure if that was, the currency is kind of managed by the SNB, but let me bring in a shorter term chart. Okay, so dollar Swiss today actually ticked out above the high from 110. So we've actually made a year-to-date high in dollar Swiss. You've got a trend line just above it. You've got kind of a almost starting to go parabolic type of trend here. If we just draw a simple channel on this, you can actually see that we are pressing into the top of that channel. So as I look at this near term, kind of suggests to me that, let's go to the 4-hour chart. You know what, I'll draw this on a different chart because I know there's a lot of levels and indicators and things on there that are probably annoying. All right, here's the 240-minute chart on dollar Swiss. So pay attention to this channel. Okay, so you can see this pretty clean. Resistance, support, you took off from it. So I'd watch for support at 97.50. Okay, that's the center line from this channel. Don't forget, you have extreme momentum kind of going on here on the, obviously the 4-hour chart as well as the daily chart. But extreme momentum usually is not a bigger top. Usually that's, what we'd call an Elliott kind of third wave, right? Or more the center of a move. So pullbacks in this case, you would want to be kind of looking to buy it, right? And in this case, I think it's 97.50 is probably your level. As far as upside potential is concerned, look, if you break through, if we hold 97.50 and break through here, then draw a fib. 786 lines up with the highs from back here in April of actually last year. And that's going to be all up at 101. I don't think that's that crazy of a thought, especially with the dollar bullish dynamics that are starting to occur, right? So Habib, I would give it 97.50 support and 101 resistance. Okay, what else did I have on here? I had, I said I told Iman that I would just real quickly run through Euro again. Then we're going to look at indices. All right, so Iman, all I'm looking at here for tomorrow is I still think the plan of attack is to sell a rally into the underside of the former support line, the parallel, which is going to be 122.70. And I do think you could get support around 121.10. So 22.70 and 21.10 are the levels in play going into ECB. All right, let's go to indices. Watch dollar yen up here, folks. We're 109.37. I am looking for something at 109.44. Even though I know the dollar's on a train right now, but if there's going to be a reaction, that's where it's going to be. Okay. Let's go to the daily. Start with the daily. So had a lot of wild swings. It feels like we're at the same place we were back here, right? We are sitting right on the 200-day average. So there are a couple options here. Look, you've got maybe an A, B, C, D, E. This could be a triangle. I don't want to be in the business of predicting the outcome of a pattern because, look, I don't even know if it is a triangle. What I will do is I will offer levels that, I think we should pay attention to. So if we zoom in here, the levels that I'd be willing to buy, if you will, I'm looking at 25.80. That is the low close from back here on 4.2. So 25.80 is a level that I'd be looking for a bounce, a trade, what have you. Aside from that, you really can't be all that constructive, like and keep a position, in my opinion, until we can, let's call it, at least get through the 200 hourly average. Okay, we're stuck right here between a short-term downtrend from January and a long-term uptrend, right? Notably from 2016 and 2009. So the levels that I'd be looking at, again, 25.80 on the S&P. You got to see that hold in order to have any sort of shot at trading a bounce. Okay, that's the level that I would look for support. I do think it does hold on the at least on the first attempt. The NASDAQ. NASDAQ, hold on. Okay, here's the NASDAQ. The NASDAQ has the cleanest bearish fork, right? You can draw it starting here on 226. Probably be looking down around 63.50, which is average, okay, which was tested back here on 4.4. I will keep in mind that cash, right, did not test the 200-day average yet, so that's something to bear in mind because it was futures that tested it back here on 4.4. So yeah, 63.50. I'd be looking, if you got a bigger rip, the NASDAQ levels are clean right here. I'd be looking at 66.30 as big resistance. Actually, you can see that's the 38.2 of this move down. The 618 was resistance. The 38.2, lots of resistance there, and it was even support here on Monday before yesterday's complete debacle. But levels for NASDAQ, 63.50, 66.30, okay? The Dow, I watch this line. Let's break through it. If you get back to it, I'd watch it for resistance again. And that's going to be up near, 24,200 or so, okay? You can just draw a horizontal line across and just see the importance of that level. And then if we go big picture, don't forget about the big picture with the Dow, right? This is our long-term chart, which goes all the way back to the 1932-82 trend line. And if we crack this level, right, we're talking about 21,600. But in the interim, you have to be, in my opinion, you have to be you have to be a buyer down at these levels. Maybe not on the Dow, which is getting hit with the big stocks, right? They took the market up, they take the market down. But at least looking at the S&P and the 2580 level is an area that I do think has to be, you have to at least look to be a buyer there. Okay, the DAX, we've been looking for resistance up here, and I still think we could get it. Right, the 200-day average is not quite touched. I mean, it's good enough for government work, but if we can get a rip, maybe, who knows, maybe Draghi comes out tomorrow and says that they're doing QE or something, I don't know. And that would probably send Euro through the floor and, you know, the DAX up into this median line resistance, which is where we've been looking for resistance for a while. But you can see how well you continue to trade between these parallels, right? So we've kind of hit support here last night, and this is a 4-hour chart now, and you actually hit near that 240-minute or 200 period average in the 4-hour chart, which you can see can act pretty decent at times as support and resistance. Okay, it's a good tool. And then the Nikkei, I guess this would be one reason why I'm not in a super big hurry to trade dollar yen on the short side with any sort of conviction, is that I still think the Nikkei can get up to 22,708, which is your yearly opening price, and this big, beautiful parallel, which was support and then resistance in February, right? So if we can get up here, 22.7, that to me, that's kind of it. Or at least it's an ideal selling spot for the Nikkei. I know it feels like it's taking forever. It's a choppy as hell rally, but look, the pattern's pretty clean. We've been talking about this for a while. A, 3 waves into a low, B, and then get a C wave higher, take out this high to make a flat, and then it's lower. So while the US equity markets are kind of all over the place here, the Nikkei and the DAX really have both, you know, more or less followed the script, you know, that we were looking for them to go to specific levels, and it's kind of on track, or I should say, not kind of, it is on track. It's just been the kind of, you know, it's been a little sloppy, right? It hasn't been easy, but they never make it easy. It's not supposed to be easy. If it was easy, everyone would do it. Okay, so that's that. We do have a couple minutes left, and I know that there are some in the community that like to look at Bitcoin, so we'll look at it real quick here. 200-day average, a little bit of a failure there. I'd be looking for support at this point, right down here, about 84.80. Okay. Looking for support 84.80, but obviously a whole lot of room. Although I guess that's all relative because Bitcoin, I don't know what is room. I mean, this thing's down 7% today, so it's not your typical utility stock. Let's put it that way. But general area where I think you'd want to see support would be down here. Maybe get a spike through this parallel. You know, but these parallels, I'm just trying to trade, you know, these parallels. And if we go to the 60-minute chart on here, you know, you do have, I'd call this a fairly clean impulse. I mean, you got a 1, 2, 3, 3 of 3, 4, 5. We'd be looking for a pullback into support. So it might be a little lower than 84.80. The 4-hour chart, for whatever reason, 200 period average works great on a lot of assets, but I'd watch it here as well, right? You can see it's turning up. So I'd pay attention down the former 4th wave lows at 7,800. And might be not on the upside for Bitcoin there. I do think that 11,000 is, actually, that's not bad. sorry, not 11,000. I was going to say 12,500. I think that is a big spot for Bitcoin, and where it could ultimately put in a bigger, call it secondary high, right? You can see if you got up to that level, this parallel is extremely clean. Resistance back here in November, support on the initial drop, consolidated above it, and then broke. So I'd be looking up here for ultimate failure. All right. Okay, well, if there are no other questions, I'm going to wrap it up. I'm going to get this archived for you, and obviously pay attention first and foremost to euro as we head into tomorrow. I think we've got good levels to attack euro with. And yeah, I'll leave it at that. Okay, so have a great rest of your week, everyone, and I will talk to you later. All right, bye.